Hi, welcome to the Market Alert for Wednesday, 6th of April 2022. So Brainard, Battered, bonds, stocks, bullion and Bitcoin with fast and furious QT threats. So quantitative tightening is coming in May, according to Brainard. She announced this yesterday, and as everyone knows, never go full Bullard. What this means is the former Fed member Bullard, who was very much hawkish as opposed to dovish as far as rates were concerned. And if you go full Bullard, then you will send the markets to the downside across the board, whether it's stocks, bullion or Bitcoin, because there's the threat of taking away the financial methadone. That's what it boils down to, as we've seen for the last 14 years. One bank spots big red flag for stocks. Buybacks are inexplicably tumbling, as you can see from this graph. During, again, the financial methadone has been pumped into the markets, and companies have been able to buy back their stocks using cheap money. Well, of course, the cheap money is going, and you can see there's a drop-off in this. And of course, if you're buying back your own stocks, you can buy back the value and also keep the price moving to the upside. So that's why, again, downside pressure for the market. Zoltan Pozsar, central banks need to bail out commodity traders now, or much more QE is coming. QE is coming, actually. We're going to see all of this rhetoric and everything else to begin with. We saw this in 2018. I know it's a bit different this time with inflation. We've got the war, etc. But let's face it, the metals markets are being hammered to the downside despite hyperinflation and the war. So they're going to keep this illusion going for as long as they can, until they can bring in the CBDC, the central bank digital currency, and that's what this is about. It's about delaying and keeping the illusion alive, everything's well, until they've got something to replace the current system with. As it says here, central banks are on the hook either way. They just don't realise it yet. Absolutely. I think they do realise it personally, which is why they're looking at this digital currency and social credit system to bring it in and control everybody through its use. There's more about this on Zero Hedge as well, that the privacy issue and the liberal issue with regards to digital currencies. But of course, the objective of the Davos set, i.e. the World Economic Forum, is to bring in digital currencies to reset the system with, and then you've got full control of everybody's whereabouts, spending, etc. China services PMI crashes in March as COVID crisis worsens. Yes, Shenzhen, Shanghai still locked down, 26 million locked up. I don't know why, but they are, but that's going to have a huge impact on supplies down the line. Surveyed firms' confidence after seasonal adjusted dropped on concerns over the pandemic and the Russia-Ukrainian war. I like how they keep still wheeling this one out, and they'll use that one to justify it. But again, supply issue that arose from the first time in the pandemic from China is also happening again now. Economic news today, well, we've got Yellen speaking at 3 p.m. That'll be interesting. She may have a counter narrative to Brainard, but 7 p.m. we've got FOMC meeting minutes coming out, so that'll be interesting as well. But obviously there's no forecast for rates on this one. Okay, gold-silver ratio, well, it was moving down nicely yesterday until Brainard opened a big mouth, and that sent the silver market straight down. It was stairs up, elevator down yesterday, which we'll look at in a moment. The moment the ratio is starting to move down slightly. Silver is starting to make a bit of a comeback, but to be honest with you, if they do go full Bullard and go for QT next month, then silver's going to get hammered down to $20 an ounce. They'll use that to their advantage. Those hold the massive 1.2 billion short positions of the paper market, will use it to their advantage, make no doubts about that. Like I say, discount inflation, discount the war, the market's ignoring all of that. The central banks are trying to keep the illusion alive that everything is well. And they're doing a damn good job, and they've done it since 2008. So they'll keep kicking the can, they'll hammer the metals, hammer the not hammer the stock market, rally the stock market, and they'll go back to QE as well. And then you might see a move in the metals, but until that point, if they're going to go QT, full Bullard, then the metals are going to be hammered. But more on that as we get to it. Right, let's have a look at the stock markets, and like I say, you can see that yesterday the market was sent to the downside, bit of an increase in volume, but let's face it, they only managed to move it down to 78% retracement. Also support here across the board there. Today the market's free to move to the upside should it wish to do so, because let's face it, that's exactly what they want to do with the market. Fibs, and what I'm looking at here, to be honest with you, there is the 89, which ties in with the 200 MA on the upside, but all of the other fibs are just markers for or targets for the market to get through. You can see the first one is at 38%, get through that, then you clear really for 50, 62 and 78 up to the 89 in the daily chart. 30-minute chart, well, it started off well, didn't it? Then Brainard opened her mouth and down she came, and now we've had a pullback and starting to move back to the upside. The first upside target is going to be the 50 EMA, followed by the DP 200 MA, and then back to we've got the R1, but we've also got this physical resistance in the way here, and then the high for yesterday. That's on the upside. What's important on the downside? Very simple, the low. If the low can remain intact, we can see that we've been and had a look at it, then that's fine, the market will move higher. But if it does fail to hold at the low, then we can head down towards the 89 here. In the German DAX for yesterday, a similar picture, except we moved slightly lower. Let me just change the colour of this. I meant to do that before. You can see that we traded down to 78 there. Market's bounced off the 20-bar moving average as well in the daily. It's got a lot to do to work its way back to the upside. First target obviously is the 5-bar moving average on the upside there. It needs to take out this. Then you've got the 50 EMA there. And then we get back to the 50% retracement from the daily as well there, from the move marked down back up to here. I mean, really should take this low, but this low is not fixed yet. It could go lower today. In the 30-minute chart of the DAX, again yesterday morning we saw the market move to the previous day's high, and the market went through this, creating a new high for today. Didn't hold, wasn't quite overbought in the 30 minutes, certainly in the smaller time frames, and the market went south, continued that way. Then of course we had Brainard, and then the market continuing down to yesterday's low. We've broken the low, but we've managed to come back. We were overbought, crossover, demand moving the market back, but looking a bit ominous for the DAX here. So from here to here we're back to 78.62 area, and looking a bit weakish there. We may get another retest of the low. We'll look at that in the 5-minute chart now, if I can find the 5 minutes. Again yesterday we were oversold in the morning, divergence, demand, market up, oversold, crossover, any supply in this area in the 5 minute, no supply, but we have a retracement there of 89%, and then the market just did this, oscillating, making its way, and eventually broke Monday's close, and then down we went. Big move to the downside. Market then went sideways with a bit of a bounce, which you can see there, up to the DP. That became a resistance, and then retracement back to the 50-bar moving average, down to the BRN, again inside of there. We've got a bit of a bounce, and then we've got the Bullard, full Bullard from Brainard, as we see there. Again oversold, demand stochastics, the market back, and then stuck in the sideways range. And overnight you will see the market has traded below the low of yesterday. Very important that we remain above this, because if we take this out, then we're going to obviously retest this support. Here's a lot of support in this area, isn't there? A big chunk there of support to the left, and yeah, if that's taken out, then we've got the BRN and then the S1 on the downside. Upside, we've got a bit of a problem with the 200 MA, the close, and again physical resistance to the left in the chart there. Meanwhile, the JPY continues to move to the upside. The Bank of Japan intervention last week failed. The market is now making its way back. And of course the dollar strengthening also. 30 minutes you can see oversold. Market retraces, market moves higher, but this time with a bit of divergence there. I mean, managed to do the full move up, retracement, second move up, and then sideways, but overnight prices starting to move back above yesterday's high. Meanwhile, the pound was hammered to the downside because the dollar moved up. We'll look at that in just a moment. 89% retracement. The market's currently holding there overbought, but we're stuck in a sideways range for the pound at the moment, and this can be seen in the daily chart. Apart from the hammer down from Brainard, again you can see the impact this has had. We've managed to find support at yesterday's low, and the market needs to move off this, but it's looking fairly weakish at the moment, and I will show you why. Because if we have a look at the metals markets, which are here, starting off with silver, you'll see this was hammered to the downside yesterday, back to 78% retracement. This is going lower. It's going to retest the 200 MA and then breaks. Once it's broken this, it will go lower over the next few weeks, because that's what they want to do with this. Yesterday, and you'll see why I'm saying this, just look at this. One comment, that's all it took, one comment to slam the price down. And the reason is because they want the dollar up. This is the monthly chart of the dollar. You can see back in April of 2020, last year, a year ago, we were up at the 104 level, and the same back in 2016. We have a triple top here, or sorry, a triple top in the making, I should say. And if we just remove these fibs, we're through 62. These are the upside targets. This is where we're going. And let me just draw this in so that once this is in place and once this is achieved, they've actually managed to do this at 103.96. And then let's just draw this one in as well. There you go. Once they've managed to get the market back to this level, then it will be free to move to the downside, but not until. So as this continues to rise, gold and silver are going to come under huge pressure, and you're going to see more of this, unless something else changes that. But that's how it's going to be. Despite the fact that it's up at the moment, it doesn't matter. It was up yesterday morning, and you can see the London fix there, because they always try and slam it down. They managed to move it higher, and then that's it. One comment from Brainard about QT, and the market falls out of bed. Same for gold yesterday, but not as much, because gold is obviously seen as a greater hedge against inflation than silver. So this stuck in a sideways range, but still not allowed to go through the all-time highs of $2,000. Well, 2000 wasn't 2063, 76 I think. Anyway, it doesn't matter, because at the moment it's still way below 1923 for gold. And again, expect more on the downside. Brent crude moving back up despite a lot more in stock. And there you can see prices starting to move back to the upside, but still in a defined range there at the moment for crude oil. Had an interesting conversation yesterday. It took one of my computers to be repaired, well sorted, not so much repaired. And I got speaking to the gentleman who is French by birth, and his family are oil people, have oil tankers that they move around the globe. And he was telling me how much fuel these things actually will use to move crude oil around, and it burns a ton of fuel every hour, which is quite staggering, isn't it? So good luck with net zero. That's all I can say while they're moving crude oil around. And he was also telling me about some of the family deals on the black market, and the black market for crude oil as well. And how his late grandfather gave him a huge wad of money, saying it was pocket money, when it was actually for the sale. When he asked his father for the sale of 100,000 litres of crude oil, a deal done on the side. Yeah, fascinating. But it just goes to confirm, doesn't it, that there's corruption everywhere. Anybody that has the naivety to think that there are honourable politicians, bankers and everything else are living in cloud cuckoo, aren't they? But anyway, enough of that. And enough for the alert today. Let's see what happens when we get the FOMC later. Yellen speaking at 3 p.m. We will await events, as they say. That's it for this one. As ever, thanks for watching. See you in the next one.